Good afternoon. A little unusual time for my weekly update, but nevertheless, happy Columbus Day. Hope you had some time to, if not be off, at least to enjoy some lighter traffic out there. Anyway, wanted to get a little recap of what happened last week and what to expect this coming week. The markets were the stock market was open, whereas the bond market was closed today. But every day since Wednesday of last week, stocks have been gaining pretty nicely. The Dow closed over 319 points on Friday, all thanks to the somewhat of an agreement between President Trump and the Vice Premier who met and have stated that there's substantial agreement in delaying the tariff hikes that they were supposed to kick off next week. The stocks were even as high as 500 points, but they gave a little bit back towards the end of the day. This week we're going to have just a few reports, so it's not a very heavy week as far as economic data. We're going to hear, though, from National Association of Home Builders on their housing market index, and we're going to also hear on housing starts, which is going to tell us how the market is doing. As far as news of last week, CPI, which is the Consumer Price Index, telling us about inflation on a consumer level, it has showed unchanged, with the core rate, which excludes energy and food, up about 0.1%, which is the highest in the last 11 years. On the other hand, PPI, which is Producer Price Index, showed us a drop of 0.3%, and that's lower than expected by the consensus of economists. There was also a survey of independent business owners on their optimism, and that came in, that dropped, rightly so, from 103 to 101. In other news, CoreLogic released their loan performance report, which again very strongly and very nicely showed that delinquencies that were 30 days delinquent dropped from 4% to 3.8%. Seriously delinquent loans, so those loans that that have been delinquent for at least 90 days, showed unchanged, which all is great news. And homes in foreclosures represent only 0.4% of all of those delinquent loans. Frank Martel, who's the president of CoreLogic, said that the fundamentals of the housing market are still very solid and very strong, with foreclosures hitting lowest levels in the last 20 years. And we are hoping that that will remain so. These foreclosures drift even lower in the months ahead as the mortgage interest rates are dropping, and there's a lot more movement towards refinancing and support for home ownership. I believe that's all I've got for you today. My 5 cents, even though last week's interest rates have increased a little bit, I want you to know that we are at record lows in looking at the last 12 months, but more so even in the last close to 18 months. Time to refinance is definitely great. And even if just to tap into the equity and be able to use this equity either to start building wealth by investing into real estate or simply by consolidating some debt, as I know this is a problem for a lot of us. Until next week, I am here waiting for any of your comments, questions, or concerns. Beata Bukowski. Have a wonderful evening.